Welcome to FXpert Trading, where I use time cycles, median lines, and other technical analysis to identify trade setups in the US stock markets as well as the FX markets. If you like the information contained within this video, be sure to subscribe for more. This is the E-mini futures daily chart, and as I mentioned last week, this is continuing to obviously show a lot of strength, and despite the fact that we are expecting some market weakness with the ending of this 2-month cycle, you can't short the market right now as it just continues to put in higher lows and higher highs. However, considering we are expecting some level of weakness, which may just be sideways action like this, you don't really want to go long quite yet either. You want to wait for this trough before putting in some long positions. Also, considering the market's strength right now, we may actually extend a 2-week cycle, and that would not surprise me because, as I mentioned, with this strength, eventually we should put in a negative cycle, and we're continuing to show a lot of strength. And while we definitely could put in a negative cycle here, I wouldn't be surprised if we ultimately kind of just go sideways and then maybe put in a negative cycle a little late. Some other reasons why I think we may put in a negative cycle are because of the Qs and the NVDA chart, which we'll take a look at right now. This is going to be a busy chart, but there are really only 2 things we want to pay attention to on this chart. It's going to be the time cycle and one of the median line sets that we're currently working with. I'll put those on right now. If we look at the blue time cycle here, this is a little more than 2 months, and you'll see this comes out to March 19th. That's a little bit longer than the March 14th trough expected on the E-mini futures chart. As I mentioned in last week's video, after breaking through this expected target area, we did consolidate a little bit, and we found support right along this warning line as well as this median line, and we're moving towards what our next target would be, which should be around 860 to 870. We could definitely blow right through that again. I don't think we will, considering we're getting very late in this cycle now. We'll probably find some resistance there. We may just go sideways before continuing up. I do think we'll get a little bit of a pullback into this general area around 800 to 770. I would expect us to come into this area to put in a trough for this blue cycle. But again, there is a lot of strength here. You definitely don't want to try to short this, even though we are expecting some weakness, because again, that weakness could just come in the form of sideways action before rocketing higher again. The main point of looking at this chart is just for the trough date here around March 19th, and that coincides with the expected trough date for the Qs, which we'll look at right now. Just like the NVDA chart, there's going to be a lot on here, but what's important is going to be one median line set that I'll briefly mention, and the time cycles. Here we're working with an orange time cycle, which is over 2 months. This is a little bit longer, only by 4 or 5 days, a little bit longer than the E-mini 2-month cycle, but it comes out to March 21st. We are also very close to, and I think NVIDIA is going to bring us up there, to a very long-term median line here, from a very long-term median line set. So I think we'll likely come to this area and eventually reject from it and come down into this trough. Now, I don't really have a good target for where that trough may come in. The first target would be somewhere around 440, but it could definitely break below that. But again, because of the overall strength of the market, you don't really want to be looking to short this. As I mentioned last week, the best trades to go for right now would be individual tickers, and I'm currently short Apple. We'll take a look at that now. I know this chart looks busy, but we're looking mostly at the 2-week cycles, which are in orange, the 2-month cycle, which is in blue, and the median lines here. Now, if you watched last week's video, you'll see I have a new median line set on here that I did not have on last week. It is a modified shift from here. Pivot 2, pivot 3, and it's blue, red, blue. This was not on here last week. However, if we remove the standard median line set, which has been pretty well respected to this point, you will see the modified shift has also been very well respected. While we have not hit either of the warning lines, the median line itself, we gapped over it, we tested it again, gapped above it, tested it, gapped below it, came up, tested it, rejected, and now we're moving down towards the lower warning line, which I think we may achieve. But considering the big dragonfly doji on Friday, our proximity to the 2-week cycle trough, I think we may come back up and retest this area before we go all the way down to our blue cycle trough. I'm going to put the standard median line set back on right now. If this is the 2-week cycle trough, I have it marked here as being in it. That is not necessarily the case. It can definitely extend further. In fact, because I'm short right now, I hope it does. But it would not be unusual for this to break above this standard median line set and then retest the upper warning line at a lower point when it's putting in this trough. It's not uncommon, whether it's breaking to the upside or the downside, for an upper warning line or a lower warning line to be back tested before reversing the trend. And so again, what that could look like is we break out, possibly come back, retest this median line before we sell off hard into what will ultimately be the trough here and or this trough, which if we slide this over and this is the trough, then the next expected trough would be March 15th, which is the E-mini or the S&P expected blue cycle trough. Or if it pushes out a few days, it could bring us to March 19th or March 20th, which aligns better with the expected Q's trough, which naturally Apple would likely fall in line with, and the NVDA trough. So how am I managing the shorts that I have open? Well, I actually opened 2 positions in my prior video, which I had made over the weekend after this big bearish candle. I opened 177.5, 175 put spread with a March 8th expiration. On Friday, I closed 1/3 of that for 100%. So I bought these spreads, they were 34 cents. And then 1/3 of that got filled for 100% at 68 cents. Considering this candle and the possibility that this 2-week trough is in, I'm going to close out the rest of that position probably at the open on Monday. I had also opened another position on Wednesday at the open. This was not a spread position. These were 175 puts with an April 5th expiration, and I gave them that extra time with the anticipation this might extend another cycle. However, considering this candle, after we broke this lows, it would have been much better if we closed somewhere down here and then back tested after putting in the trough for this cycle. But because of the way this candle shaped out, I'm probably going to close half of that position at the open on Monday. And assuming we don't gap up in a big way or anything like that, this first position that I opened should be a nice little profit, and this position will already be in profit as well. In addition to that, I'll only have half a position on here, which will give me the opportunity, should we break above this upper warning line and then see weakness early in this new cycle, I'll feel comfortable adding that short back on. So what kind of weakness will I be looking for? The same kind of weakness I've mentioned in many other videos now, where we start to put in higher daily lows and then we break below the prior day's low. That is one thing I'll be looking for. And as I've mentioned in all of these last few videos I've done, it's not always a good entry by itself, but considering the time cycles and the momentum, whether that's positive or negative, you want to look for a break of the prior day's low or of the prior day's high if you're trying to go long. So using the time cycles, considering I do still think it's going to be bearish, that will be a good sign of re-entering or for re-entering the short. I've also mentioned the 10-day moving average for Apple is something I like. The 20-day is also a moving average that many people use for many different assets. And of course, Apple is another good one where it can find proximate support, proximate resistance. Sometimes it does not respect it at all. But considering this will align with an area back testing this lower warning line from this modified shift that we broke out of, as well as this median line set, which we are currently using for our downtrend, those three things together, if we get rejection from them in the form of breaking below a prior day's low, that will possibly be a good opportunity to add to a short with the expectation we are going to extend in the cycle a little bit and come in somewhere around this upper warning line and or this lower warning line of 174 to 176, somewhere in that range. As always, thank you for watching this video, and be sure to subscribe for more.